To have a look at the Kenyan shilling, which closed 0.3% weaker on Tuesday at 84.10.30 to the dollar, compared with Monday's close of 83.85.95. Crossing over to the Nairobi Securities Exchange, we saw the benchmark index pull up 0.4% to settle at 4,978.65 points, while the all-share index edged up 0.86% to close the day at 127.81 points. Joining us is Macharia, a research analyst with AIB Capital. Many thanks for joining us.
Thanks for having me.
One of the stories that is making headlines today is IandM Bank, which has of course managed to do the reversal buyback of City Trust, and they plan to list in June 25th at a price of 448 shillings. Of course, that if you compare it to some of the large caps like East African Breweries, which is the most capitalized at about 400. Is 448 a very expensive price as an introductory price for IandM Bank listing next month?
That is a very deceptive price, because before, City Trust was just an investment firm, a small investment firm that is now backed by very strong growth from IandM Bank. And IandM Bank is not a slouch in its category. It's a top middle tier bank, and if you look at its 2012 earnings, it's slightly higher than NIC Bank and NBK. If you were to compare the price of IandM Bank as City at that 440 shillings, and you were to compare that PE with the banking sector PE, then you will see that that is a relatively cheap counter. Initially, the PE was slightly over 23 because City Trust did not have any real earnings. But once the profits from IandM back the price, then the PE will drop to about 6. So if you were to compare the price PE-wise, then IandM Bank should come back at around 900 shillings.
But how will the investors take that price?
There is still one more operation that needs to be done. They'll do a share split so that they can increase liquidity on the counter. Because initially there was less than 1 million shares, but for it to trade effectively on the bourse, they'll need to increase the liquidity on the counter. So perhaps that price will be dropped after the split from 400 to about 30-20, depending on the split ratio.
All right. Crossing over to CFC Stanbic, which yesterday rose 5% to about 63 shillings, of course on the back of the results that they reported yesterday morning. What are your sentiments on that stock, and also has it inspired some confidence in this stock?
Last year, CFC Stanbic had announced their intention to raid the retail market space by offering new products for high net worth individuals, and that proved to be a turning point when it comes to interest expense, because they were able to access cheaper deposits as compared to the corporate clients' deposit base that generally require higher interest rates. Looking forward, their corporate business remains their strongest niche market. Obviously, the personal banking business is hard for them to figure because they're going against very cemented key players like Equity and KCB. But that doesn't change the fact that they have done a good job thus far, and the profit after tax rise from Q1 is impressive enough. So we expect the counter to edge up today marginally, of course, from 63 bob where it closed previously.
Of course, we've seen other banks now coming in and reducing their base lending rate, whereby we saw CFC was among the ones who took the cue after the central bank reduced the rate. And now we have Barclays Bank, which actually now came in today morning and also reduced the rate. How do you see this playing out, especially for the loan books, looking at the health of the banks vis-a-vis interest rates?
Banks usually lower their rates just so that they maintain some competitive edge between the players. So what it will mean now is obviously there will be some small dip in the weighted average interest rates on interest liabilities that they have. But overall, because the loan book is growing and the interest rates are not falling so quickly, then they'll be able to maintain their net interest margins, and they'll be able to also grow their bottom line.
Okay, looking at the losing end, we had Nation Media, which lost about 1% to 302 shillings. Looking at some of the news that are coming in, we saw some of the subsidiaries in Uganda closed down business. They have 2 stations and a newspaper, and they were raided by the police 2-3 days ago. Is that the reason why we are seeing the stock falling, or are there other reasons?
Probably not, but that is just a reminder of the political risks that companies in Eastern Africa face. I think our operating environments have improved drastically. but there are still small impediments to doing business in East Africa. And the fact that it was motivated by political reason will perhaps dampen investors' attitude towards the counter, but not too much, because their revenues are still growing, their operations across East Africa are still doing very well, and they are increasing their market share, particularly in the digital and the radio sector.
A very quick one, which is the stock pick that you have for this week?
We are looking at EABL. We want to see how much the demand-supply forces will push the counter up, and the foreign investor participation on that counter.